All right, so this is a cool chart that kind of fits in with why we as investors are very excited about buying properties here. We actually have a very huge shortage of homes nationwide. So just to kind of make my point here, I'm going to stop the share. So according to the National Association of Realtors, across the nation, we're somewhere between 4 million and 6 million housing units short for the current population growth that's planned. We are actually, when the Great Recession hit, builders pulled way back and they haven't caught up in the construction since then. We also have a deadlock. We have a stalemate when it comes to people putting their homes on the market. We're seeing very low inventory hitting the market because why? Everybody has a low interest rate. About 80% of the people have some interest rate under 4.5%. My house here that I'm in is 2.75%. If I was to sell this house and go move down the street, I'd be paying 7.5 or 7.25 right now, unless I go with a builder NFC program. So that's where I get my interest rates back down, and that's kind of what we're looking at. The bottom line is for resale homes, they're just not hitting the market. Sellers are on hold because they've got a great interest rate, and if they move, they're going to have to pay a lot higher for the same product. The buyers are hesitant right now. But springtime 2024, just as 2023 hit, I predict that to be rather active as the feds take put the brakes on the rate increases, making national news, can put people who are in a more comfortable position of maybe this is time to move forward. We also have the millennials hitting the market, largest home buying largest home buying crowd in the nation that's ever hit. The population of the millennials is going to certainly change things. They're getting of building a family age, right? They don't want to live in apartments anymore. They don't want to live in necessarily downtown urban area. So that feeds into our investment philosophy that if we can buy homes at substantially less than what people could buy them for, they're going to go with affordability. So I'm going to show you this, go back to my screen here. This is a chart that just came out. And it's really cool to see this. I've always been an advocate for home ownership. I've been teaching home buyer classes for 20, 30 years. I've written books on home buying. I just believe in home ownership, but also believe in affordability. And sometimes it's, if you're in transition and you're not going to live there in a particular area for very long, a lot of people moving into town, they don't know where they want to live yet. They're going to rent first and then decide where they want to buy. But if you take a look at this chart, the red line is a very consistent cost to rent. That's one of the things I like about real estate and rents. You can pretty much plan on them going up over time. And this chart's very clear. This is a national chart, and you can see nice, consistent, 5-7% rent increases per year, bringing our total cost to rent right now $1,845 to rent a home. And that's very much in line with the homes that we're seeing in the San Antonio area and the areas in between, about that $1,845 rent. Think about that. Just keep that in your mind. If you're a consumer, I could pay $1,845 rent for that 1,600 square foot, 4-bedroom, 2-bath with one of Kenn's investors. Or if I wanted to buy the home in the same neighborhood, the cost to buy, which is the blue line, is $2,697 dollars per month, nearly $1,000 a month more for owning that same home as opposed to renting. That hasn't always been the case. If you realize, if you take a look at the chart, most of the time as you're going through the 70s and 80s, it was still more expensive to buy a home than it was to rent. But then we had a little bit of a flip-flop around the recessionary period. It was actually higher cost to rent than it was to own after the housing bubble. And for years, for almost 10 years, it was still cheaper to own than it was to rent. And then we hit pandemic time and mega appreciation, and now we're at $2,700 per month for the same house that you can rent from us for $1,845. So just a matter of affordability, no down payment for our homes. Of course, you got your rent, you got your deposits, but you don't have to pay, 10, 20% down. A lot of people don't have it, and they're going to rent actually to save money so they can eventually buy a home. Put that a little bit closer. When I zoom in, you can take a look at over the past, since 2006 housing bubble, where you've seen a dramatic drop in the cost of housing, and then all of a sudden a huge increase. And that's what we're dealing with. So as we're buying homes right now in our brand new neighborhoods and paying 5.95% interest rate, and we're renting them out. They're renting about somewhere between $200 and $300 a month positive cash flow. And a brand new construction, fully warranted house. It's really exciting.